Ladies and gentlemen, good morning and a warm welcome to the launch of Different Life. My name is Nozipo Mbanjwa, and I'm going to be taking care of you for the next hour or so. But before we get into today's proceedings, let's get the house rules out of the way. First of all, I'm sure you've seen the cameras. This launch is being recorded, so I'm graciously asking you to please put your phones on silent or to switch them completely off, and perhaps not take pictures because the flash imaging might interfere with the picture. I'm told that that's fine, so if you want to take pictures, go ahead. But if you want to leave for whatever reason, please do so quietly so that we continue with the proceedings without any disruption. The second thing, of course, is in the very unlikely event that there's an emergency, please stay calm and then use the exits on either side of me. If you want to make use of the bathroom facilities, you can do that. It's up at the main auditorium on the right, and the pink and the blue. Figure out the color coding on the outside. Now, that being said, let's get into today's proceedings. If what Different Life is putting out in the market is to live up to its promise, then we are potentially at the beginning of a tectonic shift in the life insurance industry in South Africa. But we also know that South Africa does not operate in isolation. So if we take a step back and just take a look at the dynamics of fast-growing markets, in particular African markets, we know that the world is about the demographics. We know we have a billion-strong population, which obviously represents a potential and opportunity for prospective clients. We know that we've got a growing middle class and one that is growing at an exponential rate. We know that the regulatory environment is changing. We know that governments have been working hard and making some progress towards improving and deepening financial literacy. And we know that to some extent, there has been an inclusion of those who have been previously financially excluded through a variety of financial services and products. The magic then is, how do you turn these demographics into dividends? But those are dynamics that perhaps pertain to the high growth markets we see in the African context. But let's take a step back and maybe also consider three very important global trends. And the reason why it's important for us to do this is because this is the canvas and the backdrop against which Different Life is launching. The first of these trends is ethical consumerism. Consumers have made it clear that they not only want to consume ethical products, but they want to procure those products from companies who've demonstrated beyond a shadow of a doubt that they are in favor of the greater good over a narrow self-interest. There are many examples of this, but perhaps one that comes to mind fairly easily, and maybe because of the visibility that they've enjoyed, is fair trade. The work that they've done towards pushing for equality and sustainability in the farming space and the broader agricultural space comes to mind. The second trend that I think is important for us to think about is digital disruption. And digital disruption occurs when we see technological advancements converging with progressive business models and effectively giving rise to new ways of doing business, new ways of communicating, new ways of forging relationships, new ways of thinking. Think of the iPad as a top-of-mind example and how that's changed the way we consume data, the way we engage documents. It's even changed our very understanding of what constitutes the workplace. And perhaps the third trend that we should think about this morning is that of the enormous regulatory changes that are sweeping through the global insurance space. Generally, there seems to be a move towards the Twin Peaks approach. The first peak being a focus on prudential regulation, and the second on market conduct and treating your customers fairly. South Africa is not excluded from this. We're seeing an industry that is increasingly heavily regulated. And what this has done is that companies have to rethink about how their compliance functions are going to adapt so that they retain their agility, they retain their competitiveness, and still navigate this fast-changing space. I've gone through these three trends because, as I've indicated at the beginning, it's important to understand the nuances, the complexities, the backdrop, the canvas that Different Life is launching against. But before I call on one of the members to speak, there's a very, very interesting proposition that I think we're going to hear today. And that is that business and philanthropy can not only coexist, but that ethics and values can be the key driver of a business model. What the Different Life team, I think, is trying to sell to us and its prospective clients is that we can change our own lives while simultaneously changing the lives of others at no cost. Now, I don't know if this is a marketing gimmick or if this is a tick box exercise. But if it isn't, and if it is a true differentiator in the market, and it is the DNA of what Different Life is bringing to the market, then, ladies and gentlemen, I think we are potentially at the beginning of a tectonic shift in the life insurance industry in South Africa. To give you the business model, to talk about the differentiator, please help me welcome co-founder and CEO of Different Life, Philip Tomlinson. He is an actuary by training, but he has over a decade of experience in the life industry. Philip, please.
Thank you, Nazipa, for that introduction, and thank you to all of you for being here this morning and joining us to hear about the launch of yet another life insurance company. But not just a life insurance company that will change the way that life insurance is done, and not just a life insurance company that will change the way that philanthropy operates, but one that can change the way that business functions in South Africa and potentially in the world. It's a big promise, and I'd like you to stick with me for the next 20 minutes or so. And perhaps we can talk afterwards about whether you believe, as we do, that we will achieve this. To understand why we have this confidence, why we have this excitement, I need to take you back to a conversation over a cup of coffee that I had with my brother and co-founder, Athol. Now, we've had many conversations over the years, and an underlying theme of that has been about impact, because we're both passionate about that. It's been about life insurance, which is my business, and about technology, which is his business, and whether there was some way of bringing those things together. But what precipitated this particular conversation, and what made it urgent, was that I had been presented with an important decision to make. I'd been on sabbatical for a few months after a stint with Frank.net, and I'd received what can only really be described as a dream job offer. It was a chance to be CEO of a startup life insurance business, backed by an incredibly strong, incredibly well-respected and well-liked brand in the South African insurance space. It was a business backed by a very deep-pocketed, large listed financial services group. And topping all of that off, I met the team that I would be working with, and they were a top bunch of people. So I had a decision to make. Now, bubbling in the background was this idea of doing a thing, or taking the job. Now, you've heard that I'm an actuary. You know that I know a lot about risk. You know that as an actuary, I'm very, very risk averse. I didn't want to make a bad decision on this one. And so I turned down the job offer and set about building something that I could happily spend the rest of my life focused on, something that was sufficiently epic. You see, the way I define risk aversion is about avoiding regrets. Because if there's an opportunity to pursue something, and if I turned my back on that, I don't know that I would have been able to live with myself. So let me tell you what it was that Athol and I thought was sufficiently epic to pursue and to spend our lives focused on. Well, sufficiently epic, it can only be one thing, really, as Phil Libben says. He's the founder of Evernote, so he knows a thing or two about that. If you're talking sufficiently epic, if you're talking about starting a venture, starting an enterprise, there really can be only one objective. I mean, let's be honest here. If you're not going to change the world, then why even get started on it? But what do we mean by changing the world? Let's be absolutely clear on that. We're about people. We're about taking South Africa, our country that we love, and the people that we love, and saying, like I'm sure everyone in this room, there's a frustration that our potential is so high and our achievement is so low, that for so many, the opportunities that should be there just aren't there. So what we're talking about is education. What we're talking about is healthcare. We're talking about alleviating poverty. We're talking about creating jobs. We're talking about all those things that will maximize impact in our country. So I hear you say, well, NGO, that's it then. Why don't we go and start a charity? Good idea, but apart from the obvious concern that both of us are businessmen and perhaps don't know what we would be doing in the NGO space, NGOs have some issues. They have some constraints. They do absolutely fantastic work, and we're not in any way taking away from the incredible value they add to so many people. But those of you here who work in the NGO space will be very, very familiar with these constraints. I've quoted Dan Pilotta, and if you have 18 minutes to spare, a very, very good investment at that time would be watching his TED Talk called How We Think About Charity is Dead Wrong. He talks about the constraints that NGOs face. He talks about the things that prevent them from building the scale and building the sustainability that you need to tackle the large social problems that we face. The first constraint is talent. For-profit businesses can poach the best and the brightest out of university, and they can pay salaries that in the NGO space would be considered obscene. Same people, same money, acceptable in for-profits, not acceptable in NGOs. Apart from talent, marketing spend. NGOs can't take donor funds meant for the needy and spend them on primetime TV adverts. The donors just wouldn't have it. If you want to start something significant, if you want to build an enterprise of value that's new, that's breaking new ground, there are two things you need, which NGOs can't have. You need to take risk, and you need to take time. Amazon's a great example of a company that can spend 15 years building scale without paying a cent back. Without paying a cent back to shareholders. Now, you try in the NGO space to take donor funds for 15 years and not spend a cent on the people who need the money. And then the last one is, as an NGO, you're wanting to build scale, you're wanting to be sustainable, but you can't tap the capital markets. You see the funding valuations of venture companies in the US, technology companies. And a company has done nothing yet, and yet they can attract billions of dollars of investment. Try that in the NGO space. Try and access the capital markets. So what Dan Pilotta articulates as a problem with NGOs and with them finding that scale and sustainability, we agree with wholeheartedly. We think he's defined the problem very well. His solution is to change charities. Our solution is to say, well, what if we could change business? Now, the reference on the slide up there relates to Tom's Shoes, which is a company that was something of an inspiration to Athel and I. They are US-based, and their business model is to take giving, and in particular giving away shoes to people who don't have shoes and who need shoes. But rather than take funds and buy shoes and give them away, they have a business model which integrates giving into business. What they do is if you buy a pair of Toms, every single pair of Toms you have, it's a one-for-one model, buy one, and they give one. And what they've done there is they've achieved much more than just a philanthropy or just a business by embedding the two together. Okay, so we're looking to start a business. We're businessmen. In fact, I'm the kind of actuary that believes just about every problem that you face can be solved if you can just get the right Excel model. And none of the actuaries are laughing because, like me, they know that that's true. But we like business more than just because it's what we do. We like business because we believe what the Conscious Capital Credo says. Business is more than just a way of maximizing a return on capital for shareholders. It's a social institution, and it's something that allows it's a powerful system of cooperation, and it can drive human progress. Business doesn't face any of those constraints that nonprofits face. Business, if a business is running well, if it's running profitably, it drives its own scale. It drives its own sustainability. Business has power built into the entire model. Business works like an engine. Philanthropy, you always need to know where next year's funds are coming from. In business, you're already generating them. You just need to know what to do with them. But business has a problem as well. And it comes into that simple statement of profit maximization. If you go to business school and you go in your first lecture of your first course, they'll tell you what is the responsibility of a professional manager. A professional manager is there to maximize future value for shareholders. Profit maximization it's something that sits inside the business model, inside our systems. It's not because the people running businesses are, if you'll pardon the French, greedy bastards. They're not out to get the community. They don't not give a damn about South Africans. But they sit with a limited mandate. that says maximize profit. You've got shareholders' funds, the shareholder or the asset manager or the man on the street saving for retirement wants profit maximization. So, I mean, just think about this. For a business to pursue impact maximization is unethical because they're in breach of a fiduciary mandate to maximize profit. Now, if you're a die-hard proponent of capitalism and the free market, you will come up with a wonderful story about how what Ethel and I need to do is build a business, make it big, make it successful, make lots and lots of money, hire lots of people, do lots of things, and then there will be this trickle-down effect. And we'll create jobs, and we'll create opportunities, and the money we spend will be spent, there'll be a multiplier effect, and in the end, everyone will be better off. And it sounds quite good, and you'll find some proponents who can even speak that more compellingly than I do. But if you put it in these words, you see a fundamentally different picture. The first thing that Ethel and I looked at doing and saying, how do we bring life insurance together with impact, was to say, well, that's easy. We take, for want of a better number, 50% of the shares of the business, we put it into a charitable foundation. And that way, we build the business, and then we can take the money and pursue impact. Our response to that was, nah, not really for us. It lacked a little bit too much on imagination, but there were a couple of other problems with it. The first one was, so in 20 years' time, we can start changing the lives of some South Africans. And to be honest, that's a long time away. And the need is now, and that just wasn't good enough. But more than that, to take a model of saying, let's keep business here, and let's keep impact there, just did not qualify as sufficiently epic. You see, we face a problem, not just Ethel and I, but as a country. We have two systems. You've got option one, which is philanthropy, which has the passion, it has the heart, it has the compassion for people, but doesn't have the scale and doesn't have the sustainability. And then you've got business. And business has all of the power, all of the energy, all of the impetus, but it doesn't have the heart. So what we're looking for is option three. Now, it reminds me of a similar situation, which I think maybe you will remember better than economic models, and that's, so we have 25 staff at Different, and of the gentlemen working with us, no less than 4 of them are now expectant fathers. I'm not sure what the odds are of that, and we've got to do some work on our paternity leave policy. But talking to those prospective fathers, some of them first-time fathers, it immediately brought back memories of my own experience. I've got 4 children, and I can still remember very, very clearly what happened probably a decade ago. I remember it so clearly because I've been indelibly scarred. And that was antenatal classes, and the 2 weeks where they tell you about childbirth. The first week, everyone sits down and the video comes up and it's natural birth. And there's a deathly silence throughout the room as you watch this, and at the end of it, you see each couple sort of talking and saying, no, it's not for us. And then you come back the next week and there's a video on cesarean section. And again, there's silence in the room as people watch this. And they get to the end of it and the couples talk and they say, no, it's not for us. And then there's a pause as people start working this out, and a hand goes up. It says, what video are we watching next week? There is no third option. But option 1 and option 2 are really not good enough. So what we were looking for is a third option, a third way. This is something that if you read the press, if you pay any attention to what's going on in the world with everything from the Great Recession to growing inequality, the world wants to know what's going to change. How is business going to stand up and take responsibility for social needs? And no one's got a model that works. So we're here. We're looking for something sufficiently epic. Somebody's got to do it, so why not us? We knew what we were after. We knew what it was that we were looking for. We wanted to take the heart of the non-profit sector and put it into the power of the for-profit sector. So what you see up there is the mission statement of Different. This is what we're about. First and foremost, we are building a business engine with all of the power to scale, the power of sustainability, so that what we have is something that can be significant. But what we're pursuing is not profit. What we're pursuing is right there in the very heart of our mission statement. It is philanthropy. Not just any philanthropy, but philanthropy of significance, and philanthropy that is sustainable, and year after year after year after year can continue to have more and more impact. And the last part of that mission statement is important, and it's what distinguishes us from any other model. We could get some funds donated, and we could get some fantastic volunteers to put in some hours. But if we're trying to compete in the financial services environment, we need funding and we need talent. And if we're going to bring funds and talent into our business to drive this business engine, we must compensate it. We must find a way of compensating human capital and compensating financial capital. So that's what we're out to build. That's what's sufficiently epic. But you're here and you know what we're talking about, so you know we've got a bit of a problem. How do you change the world with life insurance? Could you pick a more poorly suited vehicle than that? But that's what we know. So let me tell you what we've built. The core of our business is Different Life. Different Life is a fully fledged life insurance operation. The products we sell are fully underwritten. They can compete with anything else in the market, any other risk products that are sold, whether it's direct or through an intermediary. The Different Life products are right up there. I know this because I spent a decade of my career at Hanover Re working with all the top insurers in South Africa, particularly in the product development role. So I know what's out there, I know what you can buy, and I know that Different Life can stand toe-to-toe on those products. But products are only part of the insurance industry, and if a product development actuary is honest, he will tell you that life insurance is life insurance is life insurance. It's quite simple. There's a premium and there's a claim, and that's how it works. So what else is there to life insurance? Not just product, but the process of acquiring the product and the process of buying it. Now, Nozipho, you as an example. You want to buy some life insurance, so what do? You go and find a broker, and you tell the broker, I'd like to buy some life insurance. Now, everyone knows, or the industry will tell you, life insurance is sold and not bought, so the broker will do a hard sell on you and tell you all the products that you should buy. Then comes the paperwork, the application forms, lots of things to sign and lots of things to fill in. And part of that is 247 medical underwriting questions that now Nozipho has to answer, but she doesn't really know. She hopes that if she hasn't heard of the medical condition, it means she doesn't have to worry about it. But you go through this incredibly complex process, possibly followed by a medical. And then, at the end of it, once you got through that whole process, you get the policy document. Now, the policy document is 67 pages. But it's not the thickness that's going to stop Nozipho from reading it. It's the fact that it appears to be written in something resembling Klingon. It's actually actuarialese, but the point is, it's not the best experience in the world. And the industry often asks, well, why is insurance a grudge purchase? I think there's enough evidence to it there. Nozipho, if you come to Different Life, you go onto the website, differentlife.co.za. Within literally seconds, you can have an indicative quote. And within 10 minutes, you'll have a policy document in your inbox. Now, during those 10 minutes, what we'll do is we'll take you through, we use the technology that we have to create a bespoke medical underwriting questions based on your medical history. So you only need to answer questions that you know about your own medical history. And during that process, we will take you through a series of specific disclosures at exactly the right place in the process so you know exactly what you're buying. Everything you need to know about insurance is communicated to you right then and right there. And then the policy doc, we've decided to go for English, is 6 pages long, and it tells you exactly what you have and only what you have. That's the way that businesses are working these days. I don't know when you last hired a car. My approach to hiring a car is to go to Google and type car hire and then open the first 6 tabs that come up. So I'm a multi-tabber, 6 tabs open. I go to the first one, I look, I spend 8 seconds. If I can't see where to put in the details, I close the tab and go to the next tab. Okay? If a car hire company does not do all the work, does not make it ridiculously easy for me to take their product, they're out of my consideration set. Why is it that life insurance still expects so much from its consumers? So that's what Different Life is, and what we're doing there is we're making a change to the way life insurance is done. But there's something more to that, and this is the philanthropy side of it. We have another platform. It's called different.org. It is a crowdfunding philanthropy platform. So crowdfunding sites, you may have heard of Kickstarter and Indiegogo. The idea here is rather than trying to get R1 million from a single investor or a single donor, you can now get 100 Rand from 10,000 donors. So So you take the power of crowds and you use them to get people collectively to pursue significant impact. Now, on different.org, you'll find a series of carefully selected and carefully curated projects that are chosen for their ability to impact in a very specific area. We manage them closely, and we allow different.org users and donors to go on board and choose the project. Now, that's the one differentiator, is when you give money to a charity, you often don't know exactly where it goes. With different.org, you pick not just an organization, but a specific project where you believe impact is required. The second thing is Different Life covers all the costs associated with operating the different.org platform. We pay everything right up to credit card charges. There are no other fees, there's no commission, there's nothing. So Different Life is funding that. That means that 100% of any donation goes directly to the selected project. And then the third area, and this is perhaps the most significant and something that's too often missing from the philanthropy space, we close the loop. So you picked a project and you put your money in, and then what we do is we keep you posted. We create a feedback loop where we have a news feed, we tell you what's happening in the project, we send you photos, we send you video blogs, and at the end of it we'll send you a completion summary that says this is what the project did, this is what the project achieved. And that feedback loop is something that philanthropy needs, but as Dan Pallotta says, that's marketing. And if you spend 200,000 Rand on the project, can you really spend another 20,000 Rand telling people about it? With our model, we can. So what we've got there is a change on life insurance. It's a significant change, but it is admittedly an evolutionary change. And we've got a shift in the approach to philanthropy, which, while also significant, is also evolutionary. So how do we take those and make them sufficiently epic? And that's what this quote relates to. Where's the real innovative thinking? Where's the entrepreneurial insight? And how do we find a way of taking the Different Life business platform with the different.org philanthropy platform and bringing them together? And that's where we've developed what we call the different donation. Every single Different Life policy purchased by a Different Life customer, the first premium of every year, will not be charged by the insurance company. Instead, it will be a donation to the different.org platform. It will go into your different.org account, and from there you can select which project to support. It goes beyond that, because every single person that you invite and tell about Different Life, if they come on board and they sign up, we'll give you another month's different donation to take through to that platform. So what that means is that we invite all Different Life policyholders to come on board and to join us in pursuing impact through the different.org platform. Now, maybe let me extend Nozipho's story a little bit there so that you get an idea of how this will actually work in practice. She buys the Different Life policy, she gets her policy documents, and she gets an invitation to go to different.org and say, we've got your first 1,000 Rand premium, why don't you go and pick a project to donate it to? She's passionate about education, and she's passionate about poverty alleviation, and she's passionate about technology. So what she does is she chooses a project which is kitting out a rural school with iPads. And for the first time, the kids in that school will have exposure to 21st century technology. So that's great. She clicks the button, makes the donation. It's not cost her a cent, and it's pursuing real impact. And that's not the end of it. Because 2 months later, we engage with Nozipho again, and we say, go and check out this video clip. It's on YouTube, click once. And what you can see is the faces of those kids as they ripped open those boxes and switched on the iPads for the first time. You can see the teacher in front of the classroom engaging with these kids, and you can see them learning to use that technology through a number of educational apps. You get to hear the headmaster talking about how your donation has taken the horizon of the kids in his school from this to that. That's closing the loop. That's philanthropy as it could be. And that's sufficiently epic. So now you know what we want to do. What makes us think that we can do it? Because you know life insurance, and you know the industry is competitive, and you know there are lots of players out there, and there's lots of noise out there. And the first obstacle is, how do we sell it? Good ideas need to be shared. And it's not easy to share even good ideas in a very cluttered, very competitive market. So you know the insurance industry market, if you turn on your TV during the daytime, there's a fairly good chance you'll see a life insurance infomercial. You all know the big brands. You all know that they continually strive to find a marketing campaign that can differentiate them on more than color. It's a challenge. The industry's very competitive. But the world is changing. Marketing used to be about standing on a hilltop and shouting about how good your brand was, how good your products were, and about all the benefits that your customers would get by dealing with you. Now that's changing. What consumers today are looking for is more engagement. They are looking for storytelling. They are looking for a company that shares their values and a company that will work with them on what they're doing and what they're passionate about. Now, Nozipo mentioned ethical consumption and the increasing trend of consumers to look for more from the companies they deal with. Well, what if there was a life insurance company that could tell stories? What if we could go back to our customers and say, go and check this out, see not some arbitrary story unrelated to the business and unrelated to our relationship, but a story that says, look at the impact that we're having together. Look at what we're doing. Come and join us on this. Why not an insurance company that says, Nozipo, we're going to put iPads into another school this year. We know you're interested. Here's the time. Here's the date. Can we see you there? That's engagement. And in a world where social media is taking over from above-the-line marketing, that's a story that we can take to our customers. It's something that traditional financial services companies can't do. They've got fantastic brands, very powerful brands. Those brands are respected and they're admired, but they're seldom loved. So is marketing an obstacle? Or is the market as it stands today an opportunity? And the same can be said of another concern that those of you who know the industry will have about our ability to succeed. Everyone knows that to build a life insurance business, you need to spend a gajillion rand on a platform. Right? It's very, very expensive stuff. In today's world, well, perhaps in yesterday's world, that's true. But there's a reason for that. There's a reason, and life insurance has even invented a word for it. They call it legacy. Legacy systems, legacy platforms, legacy technology. And it's no one's fault. It's just what happens when you build systems in the 70s and in the 80s and in the 90s and in the 2000s. Then you find that by the time you get to 2015, you're managing a system from the 70s and the 80s and the 90s and the 2000s. And the developers who know the code from the 70s are getting quite elderly. And all your systems are completely integrated. And there's another word for that. It's called spaghetti. It's difficult. And what it has as a consequence on those companies, massive, massive cost and very, very little agility. But the technology world has changed, and perhaps more so in the last 5 years than ever before. We have things like software as a service, platform as a service, hardware as a service. One of the big discussion points, and something I grilled Athel on during that initial cup of coffee, before I decided which way to go, was what is it going to cost us to build an insurance platform? And we talked about it, and he eventually gave me a pretty strong commitment that we'd be able to do it for 10% of what the established insurers are doing in the context of their legacy. So two things. It turns out he was completely wrong, and I'm not upset with him at all, because we were far too unambitious with that number. Technology has moved so far that an insurance company that can start with a completely blank page and make use of current technology is just playing in a fundamentally different space. I talked a little bit about the process of buying an insurance policy. It hasn't changed that much in decades. And that's something that IBM have recognized. Insurance companies have been using technology to pursue optimization, but we haven't seen significant and substantial innovation in the way that insurance works. Digital disruption and technological transformation, and that's what we're pursuing. We style ourselves a little bit as a technology startup. We rather than model ourselves on a big financial services group, we model ourselves on a technology company. Now, you will know that you can start a technology company in your parents' garage. You can't start a life insurance company in a garage. And that brings me to the last of the big perceived obstacles. Where do we find the funding? We're talking life insurance. We're talking financial services. This is not Mickey Mouse. This is about, it requires big money to get into. Breaking into the market, providing the security and the confidence to customers that will be around in a year and 5 years and 10 years and 50 years to make sure that the benefits on the policy are paid. But we found a solution to that as well. So the first thing is our policies, different life policies, are all underwritten by Old Mutual Alternative Risk Transfer. They're part of the Old Mutual group, they're Old Mutual cell captive arm, And what that means is that the benefits on different life policies are guaranteed by an old mutual company. You can't do better than a big green guarantee. So our customers need to have absolutely not the slightest concern about whether benefits and policies will be paid. But even beyond that, what we've been able to secure from our reinsurance partner. Now, there's this thing in the reinsurance space called new business financing, which is quite commonly used to provide funds through reinsurance to insurance companies. Not usually startup companies, which means that our reinsurers were taking a bit of a leap of faith. But it gets worse than that. On the 6th of December 2013, I sat down with some reinsurers, and already we're in December, the year is winding down, and I said, so this is the business plan, and they liked it, which was good. And then I said, we are going to need a lot of your money. And they said, well, let us get back to you. And I said, okay, look, I know it's December, and nothing happens between now and the middle of January. And I know you'll need to go back to your parent company in Europe or the US to get a decision on this, because it's a very unusual structure, and we're asking a lot. But we're a startup, we need to move quickly, and we need to start hiring people in the middle of January, so please come back with an answer almost immediately. It was a little bit cheekier than we realized at the time. But don't estimate the significance of that vote of confidence, because more than one of the reinsurers came back and said, yes, they would like to support us. These are companies that operate internationally. They're in life insurance markets all over the world. And from what we've heard from them, what we're pursuing is something, knowing where insurance is going, knowing how the markets are set up, that they're excited about. And I think it's fair to say something that they haven't seen elsewhere in the world. So funding, we're talking, I won't be able to give you exact numbers on funding, but we're talking budgets in the hundreds of millions, not in the tens of millions. So we talk about bootstrapping, but bootstrapping for an insurance company is not quite the same as bootstrapping for a technology company. We have the funding, we have the underwriter in Old Mutual Alternative Risk Transfer, and then the third thing that we need is the team. Now, this is something that it was, let me say, surprisingly easy to get top quality individuals. Athel's connections from the technology space and mine from the insurance space. These are people coming out of top jobs with top companies. And we're a startup, we didn't have premises at the time. We got those after we got the staff. And we go to them and say, come and join the startup. But we were telling a story, and we were telling a story about something sufficiently epic. And what we've been able to do is bring on board a team of top developers on the IT side, top insurance professionals, marketers, finance people. And that's a consequence of what we're pursuing, because it's not difficult to get excited about it. So, in conclusion, and maybe dealing with a final obstacle or a final opportunity. Life insurance is a grudge purchase. You want to get, you know you need it. I don't think we need to convince providers that their dependents would be in a bad way if they weren't around. People know they need life insurance. They want to get the purchase out of the way as quickly as possible and then never think about it again. And we're about providing life insurance that our customers can feel good about. How do we do that? The first thing is our product. It's a top product. It's very straightforward. It's easy to understand. It's competitively priced. Secondly, our process. We're talking easy online access. Like every other industry where technology has transformed the way consumers interact, we're doing the same with life insurance. And then the security of being underwritten by OMART. So there's nothing at all to feel bad about life insurance, but there's still a very, very big leap to go forward to feeling good. We're aware of how big a claim that is. But life insurance with different life is about more than a policy protecting your loved ones financially in the event of your death. A life insurance policy with different life is joining with us, joining with many, many other South Africans to pursue meaningful, significant, and sustainable impact. The virtuous cycle that comes from taking the life insurance business, tying it into the philanthropy platform through the different donation, means that the more philanthropy we do, the more life insurance we do, the more life insurance we do, the more philanthropy we do. A last thing that's different about different life. We think we've got an innovative idea. We like it a lot. We're putting a lot into it. And we would love to be copied. I'm not sure when the last time you heard that was. We're a business that is saying to consumers, we need to do more for South Africa, and you know we need to do more for South Africa. The power is in your hands To be 100% accurate, the power is in your wallets. We want consumers to vote with their money as to what kind of companies they support. We'd like them to support Different Life, not just because we offer top products, not just because we're a pleasure to deal with, not just because we give them guaranteed security, but because we're about changing the world. We're about maximizing impact. We're about something sufficiently epic. Thank you.